futures trading volumes abroad, the Singapore Stock Exchange has launched single stock futures. Now, this was a much anticipated event. A lot of stories filed on BloombergQuint.com about what the NSE was wanting to do. Remember, NSE earlier wrote to the SGX seeking to delay the launch as well. Now, Sajeet Johnson with the trading parameters on these futures on SGX, and what maybe this could mean, some bit of forward gazing on what this could mean to stock futures trading as we know hitherto in India. Or for Indian stocks. Sajeet, good morning.
Good morning. That's what is going to happen, because what we are going to see is like this thing, SGX Nifty going to give us an indicator. The SGX single stock futures will give us an indicator of some of the index stocks, how they're performing. Now, today is the first day. We just seen 4 counters getting open, getting bid and ask for those counters, which includes ITC, ICICI Bank. You have Ultratech Cement, which is coming in, and one more counter which is there. But ITC has done some volumes there, but other volumes are yet to pick up. But it's just the first day. You will see as we go closer to the market opening, you will see some trades happening on them. The positions being taken. You have a lot of positions which are already built up in the domestic market, and that would, I assume, that over a period of time would move on to Singapore futures. And that's one of the concerns which was also discussed at the board meeting of National Stock Exchange on Friday. The exchange had a board meeting, and the board deliberated on the risk which is coming from as a result of this. But what I understand from my sources is that while the discussion happened, it all went down to the extent of saying that now it's for the government to intervene and it's a government-to-government thing rather than the exchange can do anything about it, because they don't want to take a unilateral action which will be taken, which will be perceived as anti free trade or kind of thing, and the relationship with Singapore is very good. For India, Singapore's relations are very good, and they don't want to bring in such kind of uncertainty or any issues in that, and they're very wary about it. So it is going to be taken up by the government as and when they have the bandwidth to do it.
Sorry, why would the government intervene in this, Sajeet? I mean, they didn't or couldn't intervene in the fact that a lot of your currency trading moved to the NDF market, and that is a very sovereign risk related element. Why would they intervene in individual stock futures?
The expectation from the NSE is that before we take an unilateral action, the government should intervene and try to get a resolution here. Because if NSE comes out with a action, it would be perceived as anti-trade. Simple in that sense, and that would be a counter narrative to the government's entire thing about India open for business, and that's one thing. The biggest challenge for NSE is that the entire market is going to shift there, and if entire market is going to shift to Singapore, like we're going to see in the next 1 or 2 months when volumes start picking up there, then this the entire derivative market as we stand as it is in today, it's going to be governed by that. The control of the government or the regulator on that market is nil. If you look at the specifications which have come in, is a dollar-denominated contracts, so there is no translation risk for any of the FIs, so they directly come in there. The capital gains and everything is very sorted in Singapore as compared to here. Now we have an LTCG which is coming in. The transaction cost is much lower. The transaction charges in India are considered to be lower, but when you add SCT to it, the transaction charges cost goes up.
There won't be a tax arbitrage, right? I mean, futures trading anyways would have attracted 30% speculation income. So I don't think that would have, LTCG wouldn't have had an impact, right? But more importantly, just the volumes moving up. I mean, with the futures, SGX futures volumes, SGX futures took away a lot of NSE cash, NSE futures volumes. This is what single stock futures could do. Is that what you would expect?
So the single stock or SGX futures open interest, which was around $9 billion, is much more than the open interest FIs have in India for index futures. Now, we expect that at least 50% of that volume and open interest is going to migrate there. Singapore is a tax compliant regime, a very strict tax compliant regime there. It has, and for that matter, people who are investing, they would get much more incentive, because many of the fund managers are located there and they're working out of it. Remember, last 2 or 3 years, government has been trying to bring in the fund managers to the domestic market. There have been policies in budget saying that, okay, you come over to India, why are you trading from Singapore? Now you have the market moving to Singapore. Why should they come to India?
True.
All right, interesting stuff there, Sajeet. Thanks so much. Sajeet Manghat flagging off what will be an interesting market to watch actually now for the next few months.